Welcome to Money Talk JA, the channel where we break down how Jamaicans at home and abroad can build real wealth step by step. Today, we're diving into one of the most powerful wealth building tools available in Jamaica, the stock market. This video is titled How to Invest in the Jamaican Stock Market for Beginners. And whether you live in Kingston, New York, London, or Toronto, by the end of this video, you'll know exactly how to start, how to avoid costly mistakes, and how to make your money work for you through the Jamaican Stock Exchange. So grab your notebook because this one is packed with practical, actionable advice. If you want more videos like this from the Money Talk JA channel, make sure to hit that subscribe button right now. It will really help the channel grow, plus you will get notified when we release more content like this in the future. Let's start with the big question. Why invest in the Jamaican Stock Exchange, the JSE? The short answer is because it works.
The stock market is a dynamic place for one to make money. The fact is that it is companies that are operating businesses, and whilst you invest, you become a shareholder in these companies. Then if the companies make money, you will make money. And there are so many ways in which the company will distribute that money to you, or you can see that you have made the money. If the company does well, the prices will go up, and you will see it based on what you bought it for in the first place, where it is now. You have made money, although you have not yet converted. And if the company does well, you will get dividend, a part of the distribution of profit, and so you make money again from that. So there are several ways in which an investor can make money in investing in the market.
The JSE has consistently been ranked among the top performing stock markets in the world in multiple years, even outperforming giants like the Dow Jones and the S&P 500 during some periods. And that's not luck. It's the result of strong companies, good regulation, and a growing investor base. When you buy shares on the JSE, you're not gambling. You're buying ownership in real Jamaican companies that produce food, sell insurance, build homes, manage money, or provide utilities. You're not just betting on price. You're investing in Jamaica's growth. But before we jump into how to invest, you need to build the right mindset. Think long term. The stock market is not a quick money game. It's a wealth building machine. The people who win are the ones who stay invested, who reinvest their dividends, and who think in years, not weeks. If you're looking to flip your money overnight, you'll likely lose. But if you're willing to plant your financial seeds and let them grow, you can transform your future. Step 1. Understand the basics. A stock, also called a share, is a unit of ownership in a company. If you own one share in a company like Grace Kennedy or NCB Financial Group, you own a small piece of that business. When the company grows and earns profits, the value of your shares can go up. Some companies also share a portion of their profits with investors through what's called dividends, regular payments made to shareholders, usually quarterly or twice a year. Next, let's understand the role of the Jamaican Stock Exchange itself. The JSE is basically the marketplace where all this trading happens. Companies that want to raise money list their shares on the JSE so the public can invest. Investors like you and me buy and sell those shares through licensed brokers. The JSE has two main markets. The main market, which is for larger, more established companies, and the junior market, designed for smaller or medium-sized businesses. The junior market often attracts younger investors because it offers strong growth potential, and for companies, comes with tax incentives for a period of time after listing. So now you understand what stocks are and what the JSE does. Let's move to step 2, how to actually get started. First, you'll need a brokerage account. Think of a broker as the middleman who connects you to the stock exchange. You can't just walk into the JSE and say, I want to buy stocks. You need to go through a licensed brokerage firm. Some of the top brokers in Jamaica include NCB Capital Markets, JMMB Investments, Maybury Investments, Sagicor Investments, Burrito Investments, and Scotia Investments Jamaica. If you're living abroad, the good news is many of these brokers allow Jamaicans in the diaspora to open accounts too. You'll typically need a valid government ID, proof of address, your TRN number if you have one, and sometimes proof of income or tax documents depending on the country you live in. The process can take a few days to a few weeks, but once approved, you can fund your account and start investing. Let's talk about funding your account. If you're in Jamaica, it's as simple as transferring Jamaican dollars directly from your bank account into your brokerage account. If you're overseas, most brokers allow you to send funds via international wire transfer. Always confirm the instructions with your broker because wiring money incorrectly can cause delays. Some brokers also allow you to fund accounts in US dollars, depending on the nature of the investment you're planning. Now that your account is set up and funded, it's time for the fun part, choosing what to invest in. This is where most beginners make mistakes because they buy whatever's popular or what they hear people talking about. But the best investors make decisions based on research, not hype. So here's how you research a Jamaican stock. Start with the company's financial statements, their income statement, balance sheet, and cash flow statement. Don't be intimidated. These documents tell you how much money the company makes, how much it owes, how much profit it keeps, and how efficiently it's operating. You can find most of these on the Jamaica Stock Exchange website or directly on the company's website under the Investor Relations section. Look for consistent revenue growth. That means the company's sales are increasing year over year. Check profitability. Does the company make real profit or is it barely breaking even? Examine debt. Too much debt can be risky, especially in times of high interest rates. And finally, check dividends. How often does the company pay them? And have they been increasing over time? Let's take Grace Kennedy as an example. It's a diversified conglomerate that has food, banking, and insurance businesses. It's been around for decades, pays steady dividends, and is seen as one of the most stable companies in Jamaica. That's the kind of company beginners might consider for a long-term hold. Another example is NCB Financial Group, Jamaica's largest banking group. Again, strong track record, steady profits, and consistent dividends. Then you have growth stocks on the junior market like Mailpack Group, which benefited from the e-commerce boom, or Fontana, a retail pharmacy chain that's rapidly expanding across the island. These companies might not pay large dividends, but they have growth potential that can drive share prices up over time. Now, when you've found a company you like, the next step is to decide your strategy. Are you investing for growth or for income? Growth investors look for companies that will increase in value significantly over time, even if they don't pay dividends right now. Income investors focus on companies that pay steady dividends that can provide cash flow. Many Jamaican investors do both, a mix of growth and dividend stocks for balance. A smart beginner move is to start small, even a few thousand Jamaican dollars. You don't need to start with millions. The key is consistency. Buy shares regularly, even if it's a small amount, and let time do the heavy lifting. This is called dollar cost averaging. It smooths out your entry price and reduces the impact of short-term market swings. Now, once you're ready to buy, you'll place your order through your broker's trading platform or by contacting your investment representative. You can choose a market order, which buys at the current price, or a limit order, where you specify the maximum price you're willing to pay. Don't panic if your order doesn't fill immediately. Trading volume on the JSE can vary, especially for smaller companies. After you've bought your shares, the real discipline begins, monitoring your investments. You don't need to stare at the screen every day, but stay informed. Follow the business news, company announcements, quarterly reports, and government policies that could impact your stocks. For instance, if the Bank of Jamaica changes interest rates, it can affect bank profits and stock prices. If a company announces a stock split or new expansion project, that could be good news for investors. Diversification is your best friend. Don't put all your money in one company or even one sector. Mix financials, manufacturing, retail, energy, and even tourism-related stocks. If one sector struggles, the others might still do well, keeping your portfolio balanced. Let's talk about the potential returns. Historically, the Jamaican stock market has produced strong returns, especially for patient investors. Companies like JMMB, Grace Kennedy, NCB, and Panjam have rewarded shareholders handsomely over the years. Dividends alone can provide a steady stream of income, and when you reinvest those dividends to buy more shares, your wealth compounds faster. That's the secret of long-term investing, compounding. But of course, no investment is risk-free. The market goes up and down. Share prices can fall during recessions or unexpected events like hurricanes, political uncertainty, or global shocks. The key is to stay calm, avoid panic selling, and remember why you invested in the first place. If the company's fundamentals are still strong, dips are often opportunities to buy more at lower prices. Fees are another important factor. Brokerage fees, exchange fees, stamp duties, and sometimes transfer costs can eat into your profits. Always ask your broker to explain all charges upfront. Typically, trading commissions in Jamaica are a small percentage of your transaction value, but they add up if you trade frequently. That's another reason why long-term investing tends to outperform short-term trading. You avoid unnecessary costs. If you're in the diaspora, pay attention to tax implications. Some countries may tax your foreign income or dividends from Jamaica, while Jamaica may withhold taxes on non-resident investors. Check with your broker or tax advisor to make sure you're compliant and optimizing your returns. Another smart move for beginners is to track your progress with a simple spreadsheet or investment app. Record the date you bought shares, how much you paid, dividends received, and the current value. Over time, you'll start seeing the story of your money unfolding. And trust me, few feelings beat watching your wealth grow. As you get more comfortable, you can start exploring other investment opportunities on the JSE, like unit trusts or exchange traded funds, ETFs. These are pooled investment products managed by professionals that give you exposure to multiple companies at once. For example, a JSE index fund lets you invest in a basket of Jamaican companies all at once, reducing risk and saving time. Let's look at what a beginner's portfolio might look like. Suppose you have 100,000 Jamaican dollars to start. You could allocate 40% to a blue chip company like Grace Kennedy, 30% to a bank like JMMB or NCB Financial Group, 20% to a growth stock like Fontana or Mailpack, and 10% in cash to take advantage of future opportunities. Over time, as your knowledge and confidence grow, you can rebalance or expand that portfolio. Remember, the most successful investors are not the ones who start with the most money. They're the ones who start early and stay consistent. Time in the market beats timing the market. If you're watching this from the diaspora, investing in Jamaica is not just about profit, it's about participating in the country's growth. Your investments help Jamaican companies expand, hire more people, and strengthen the economy. You're literally putting your money where your roots are. Now let's talk about common mistakes beginners make so you can avoid them. Number one, following hype. Just because everyone is talking about a stock doesn't mean it's a good buy. Number two, expecting instant profits. Investing takes patience. Number three, not diversifying. Putting all your money in one company is dangerous. Number four, ignoring fees and taxes. Those small costs add up. Number five, not doing research. Always know what you're buying and why. Finally, keep learning. Read annual reports, attend JSE investor briefings, watch financial news, follow credible Jamaican business analysts, and most importantly, stay disciplined. The market rewards those who stay informed and calm when others panic. So, to recap, Here's your roadmap. Learn the basics, open a broker account, fund it, research good companies, diversify, keep track of your costs, reinvest your dividends, and think long term. Do that consistently, and you'll be amazed where you end up in 5 or 10 years. Investing in the Jamaican Stock Exchange is one of the most empowering things you can do for your financial future. You're not just watching the economy, you're part of it. And when Jamaica grows, you grow too. Thanks for watching Money Talk JA. If this video helped you, hit like, share it with a friend, and subscribe for more Jamaican financial education every week. Comment below and tell us which Jamaican stock you're most interested in or what you'd like us to cover next. And don't forget to click the video on your screen to watch more Jamaican financial content. Until next time, stay smart, stay patient, and remember, let your money talk for you.